Happy Friday afternoon, everybody. It's Travis Watkins, and we've been talking a lot here lately about the offer and compromise process. That's the settlement program that the IRS has, and it's a great program. If you qualify for it, you can save substantial money in many cases, and as I've said before, it's if you can support in good faith a offer and compromise in any manner, you should by all means try the offer and compromise process with the IRS. And I'm going to walk you through some stuff here today that's really like strategy on IRS offers and compromise, and you could really take this stuff and kind of run with it. I'm going to point out a few things that might help you here in the process. Most notably, the IRS has a little calculator on its website, and it's no secret that they have it, and it cuts through a lot of things here for you. Shows you kind of whether or not you'd, in big terms, be a candidate for an offer and compromise. So without further ado, let's jump right into it, because there is a lot of meat on the bone on this one, if you know what I'm saying. Let's take a look at this thing here called the Offer and Compromise Pre-Qualifier, and you can find it at irs.treasury.gov/OIC_pre_qualifier/faces, whatever that means, /OIC_screen1. And let's just go through it, because it really mirrors the IRS's 656 booklet, which is the Offer and Compromise booklet with the IRS. And as I mentioned, a lot of things will be pre-filled here for you. And I'll show you kind of what's good about this thing and what may not be so good about it. But let's just kind of jump in with a few like kind of sample type numbers and things and see how this goes. All right. It asks you, are you in an open bankruptcy proceeding? And you have to not be in one for them to consider it, so you would hit no. If you hit yes, and I'll just show you what that does. Have you filed all required federal tax returns? We'll say yes. Have you made all required estimated tax payments? Another qualification thing that you have to meet to get an offer and compromise. If you're self-employed and have employees, have you submitted all required federal tax returns? You've got to have that there. Now, keep in mind, I've checked the yes on an open bankruptcy proceeding, and bang, you're not eligible for an offer and compromise because you are in an open bankruptcy proceeding. So you don't want to do that. So let's say no. If you haven't filed all your federal tax returns, which is a big one, and you go through the rest of this thing, bang, you're not eligible because you haven't filed all federal tax returns. So that's something that holds up a lot of people on these deals. You have to have all federal tax returns on file when you go to submit your offer and compromise. So make sure that you do that at the latest by the time that you file the offer and compromise. And we'll talk a little bit about the strategy of how the timing of all this stuff works also, because the IRS is going to require you to verify all these things that it's asking you about here on this page. So let's go ahead and mark that one yes. Estimated tax payments, another huge one. This is something that knocks people out of the offer process all the time. They have to make estimated tax payments along the way. If you don't, let's just give it a shot. Bang. You're not eligible. You didn't make all required estimated tax payments. So got to be in paying compliance at the time that you submit the offer, or at the latest by the time they pick it up and start looking at your offer and compromise to process it and or approve it. That's the first thing they do right out of the gate, by the way, is check to see that all returns and estimated payments, if required, have been made. And if they haven't, this is easy for the IRS. They just kick it right back to you. No appeal, no denial. It's just kick back to you, start over, you know. And by that point, usually This process at its quickest is about a 6-month process. So you don't want to lose a couple of months in this process just because you didn't have your estimated tax payments and everything all ready to move forward. All right. So then we'll go back and click this one. We've made the estimated tax payments. We've made the required federal tax deposits for our employees. I'll put in a zip code that's just mine for purposes for ease here. State of Oklahoma, County of Oklahoma County. It'll ask for your county there. And what it's doing here, the reason it's asking for this in this format is because it's going to start populating some geographic, I don't know what the word is there. It's going to be calculating some expenses that are allowed by the IRS by, we'll just say, your area where you live. So that's what they're asking about there. By the way, none of this information is being collected for any purpose by the IRS, so you're free to do this thing without Big Brother jumping out of the bushes and saying, aha. But moving on, total members of household, I'll just put in 3, and we'll say that there's no 65-year-olds or older living in this household. Let's say, for purposes of this one, let's put in a number, let's do that 125 that I've already got populated in here. And what is the most recent tax year you are requesting to compromise? Let's go ahead and let's put in 2000 and let's do 2011. All right, and you hit next. And the reason they're asking for this too, by the way, beyond the obvious, they want to know what the most recent one is because remember, we've talked about before, a lot of this is figured off of the IRS's statute of limitations. How many months are left on their CSED, collection statute expiration date? And so this nifty little calculator has this already all built in, however many months. So they want to know what the newest one is, because anything past that, you know, I don't know if this thing is smart enough to you know, show you. I guess we could go back and, when this is all over, figure out if it would tell you if the IRS's statute of limitations is knocked out. My guess is it does not. So anyway, this is just kind of a exercise to give you some idea what an offer could look like. All right, moving on, hitting next. Let's put in a total bank balance of, what do you know, $12. The reason I'm putting such a low one in there is that you should have a low bank balance at the time that you do your IRS offer and compromise, all things being considered. And you're saying, hey Watkins, that seems a little sneaky, what are you doing there? You should be depleting your bank balances down really to zero by making estimated tax payments, for one. For this current tax year is a great place to put the money. You could, I guess, put some of the money towards the most recent tax periods at issue if you have some available money after paying estimated tax payments. More likely and most helpful for you would be to use the money in these bank accounts for things that the IRS would accept: food, clothing, shelter, health, welfare, transportation. We'll go through all these things here, but just know you can use the money in there to essentially to stay alive, or maybe prepay some mortgage, some of your mortgage, or your rent would be a nice place to put it. All things that the IRS would allow you in their infinite beneficence to spend your money on every month. All right, so real low bank balance there. Let's put in a home market value here of a $200,000 home. Let's do a home loan balance of $195,000, shall we? Very low equity situation here, which is very common. A lot of people think, well, I can't get an offer and compromise at all if I have a home, and we'll see about that, I guess, in this exercise. But what this calculator is doing here also behind the scenes, and we'll see it here when we go to the actual offer and compromise form, is they're giving you what's called the quick sale value of the home. In that circumstance, they're at a $200,000 home value. And where do you get the home value is probably your next question. The IRS usually will accept it off of the county assessor website. Usually it's online in most localities. If not, you could get that from your county tax assessor. But a $200,000 home value to the IRS is really only worth 80% what you could get in a quick sale, or QCV, or QSV, excuse me, quick sale value there, which in that circumstance would be $160,000. So if the home loan exceeds $160,000 there, which it does, there's really no home loan equity, or excuse me, no home equity there in this calculation. All right. Moving right along, let's say that this family of 3 has one vehicle, but it's a newer vehicle, and they have no significant equity. In other words, the value of the vehicle is less than what is owed on it, which is virtually always the case in a banknote situation for a new car, unless you put down significant money with it. Let's say they don't own a second vehicle. We'll put 0 in there. Let's say that they have no retirement account, no other real property other than that home, no other assets with equity, planes, motorcycles, RVs, etc. No stocks or bonds in this one, no miscellaneous. And you should be, if you've got time in the process, the IRS is not breathing down your neck, and so you're doing this pre-qualifier in a not negotiating under fire, so to speak, which is why you would probably be taking the time to do a pre-qualifier instead of going straight to the emergency room to a tax professional. Then you should be tightening up these numbers so that you don't have a lot of this stuff and taking any money that is in any of these things and applying those things towards that stuff that I talked about with the necessities of life, which the IRS will allow you to spend your money on. All right, moving right along, hitting next. Gross wages, let's say this person makes, I don't know, say $9,000 a month. This family does. Let's give them no interest and dividends, no partnership income, no rental income, just to make these things easy for us in this process. No net business income, no child support coming in, no alimony coming in, no additional income coming in. Moving right along, let's go ahead and put a pretty high mortgage in here and just see what it does on this $200,000 home. Let's put them at $3,500 a month. Maybe that's like a 15-year note or something there. Total vehicles owned would be 1. Let's put the loan or lease payment up pretty high. Let's say that was a brand new truck that this taxpayer family has. Only one vehicle, $850 a month. Vehicle operating costs, let's stick them in at $200. Let's do public transportation costs of, let's do 0 there because there's no, let's keep it clean. Let's say they got no health insurance there, no life insurance there. let's put them at a real low withholding there. Let's say $1,000 a month. I don't think you could ever get away with something like that, $9,000 a month, with $1,000 a month of withholdings. But that's for another day. Trying to keep it clean and green here. Court ordered payments of zero, dependents care costs of zero there. Let's say that the kids are, older than toddlers. No dependent care costs. And so the next screen tells us that the taxpayer here does not qualify for an offer in compromise based on the information you provided. You have reported expenses of $5,550, and we have allowed expenses of $4,866. Your disposable income is therefore calculated at $4,134. So the difference between the $9,000 that we reported as gross income there versus the $4,866 that they actually allowed. And when they give you this screen here and this pre-qualifier that you don't qualify, they don't give you kind of how this all breaks down. They point you over to reviewing of other things to try to figure out what works there and what doesn't. But just for this exercise, this person at those things does not qualify for an offer in compromise. Now be careful about that, because I will show you a few things here as we manipulate this calculator to kind of come up with a strategy moving forward. You can't really rely too heavily on this, because there are a lot of nuances, there are a lot of things that that you can fight about, and that you can exceed these allowed expense numbers. See, there's a pretty solid difference here between what they reported at $5,550 versus the $4,866 that was actually accepted by the computers here. So we'll talk about that kind of as we go through. Let's kind of move backwards here from this one and see if there's something that we can do to blow your mind, to show you that a little bit of pre-planning on these things, if you have the time, can really, really help you. Let's do this. Let's add some health insurance premiums here. Let's give it a healthy one, because life or health insurance is pretty expensive nowadays, if you haven't noticed. Let's give them a little bit of life insurance here too. And people go, well, what if I ain't got no life insurance? Or what if I don't have health insurance? Well, my answer to that is, go get it. If you don't have it and the IRS allows it and you've got the time, in other words, you're not facing immediate levy right now, go do your planning, go get some of this stuff. That's what I'm going to tell you when you come in and we run the numbers, and you may not qualify, or the IRS, we submit an offer in compromise and they tell us that you don't qualify. We're going to go in and start chopping wood on some of these things that they will allow. So let's just do $1,000 there in health insurance and $200 in life insurance. What do you know? In determining your proposed offer amount, the total available equity is based on information you entered and adjustments allowed by the IRS. They've got our tax debt of $125,000 there. No equity, like I mentioned, in any real property. That's a zero. Monthly income of $9,000. Now they're allowing us $6,066 in monthly expenses in this scenario. Let's break it down. Food, clothing, and miscellaneous. We didn't give that. I don't think they gave us a box to try that, but they will allow $1,384 every month. And this is what I'm talking about here. These allowed food, clothing, and miscellaneous expenses. If the IRS is telling you, like it was in that previous scenario that we ran that you're not a candidate, it didn't give us a chance to exceed this $1,384 like you can in real life with the IRS. Now you have to give them backup. You have to make arguments probably on this that you need to exceed the food, clothing, and miscellaneous, but you know, it's not set in stone like it is here in this deal. Rent, mortgage, and utilities. Remember, we put $3,500 in. It's allowing us only $1,633 there on the mortgage or rent in that scenario. Okay, so that's another one of those geographic specific numbers there, 1,633. Okay, it can be exceeded also. All right, this one is pretty interesting when the computer says we can get an offer conceptually and will allow us to look at where they came up with their numbers. Remember, this taxpayer has a brand new truck that has an $850 really steep monthly payment on it. And let me say that this kind of cuts both ways. You know, this is showing an accepted offer, but when you're dealing with real live offer and compromise examiners, you know, they don't like to see brand new trucks and requests to have the taxpayers' taxes reduced. So that's a deal where the human elements of things might hurt you. But for purposes of this person is getting a offer and compromise, even though they have a new truck where they pay $850 a month. Maybe they rolled a couple of new trucks into that. I don't know. They're only going to allow $497 on it. Okay? Remember, there's no vehicle 2. Vehicle operating costs, we were pretty spot on there. They allow $196. We put $200 in. No public transportation costs. No out-of-pocket medical expenses. That's another one of those ones, though. They're going to give you at least $156 worth of it. And that's a great one to be able to exceed the monthly gimme, I guess you would call it, in allowed expense that they just give you without much question. But if you have a lot of out-of-pocket medical expenses, which you might if you don't have insurance, which you would if you don't have insurance, then that's another thing that can be exceeded in that process. All right. Health insurance premiums. Remember, we put in $1,000. They gave us the whole kit and caboodle, all $1,000 of health insurance premiums. Get some of that spam out of here. So that's a huge deal, and you know, people go, well, so now I have to show the IRS that I'm spending $1,000 in premiums every month? Yeah, you do. And the next thing I can just hear somebody saying is, well, man, I don't even need that much. And the point is, like with everything, imagine these each one of these lines here of allowances as boxes, you know, and you just go fill them up. And some boxes are smaller than others, you know, like this food, clothing, and miscellaneous has a lid on top of it. Now you can open the lid and put more into it if you can argue that to the IRS. This one's got a lid. The rent, mortgage, utilities has got a lid. You get the point. But some of these have no lids on them, like health insurance premiums. And guess what? You get a pretty good bang for your buck by having health insurance. You know, I don't know what all the current state of the law is at this very moment, but we do know, as I mentioned, that health insurance is expensive, and you're gonna get health insurance when you pay those premiums. Go figure. And if you get sick or a family member gets sick, well, you get, you know, the double benefit there, not only of having it as an allowable expense, And by the way, nobody thinks about this when they're running their lives day to day. This is all an exercise that is very outside the norms for how we all live our lives. But when you're in the offer and compromise context and you have some time to do some figuring, to do some strategizing, this is where you live. And so you get the bang for your buck of having some health insurance, and doesn't look like there's any lid whatsoever on that in this scenario. Moving on, life insurance premiums. They gave us all $200 of that without any question. Federal, state, and local taxes. They gave us all that we could show that we paid there. And how do we show them? We give them our paycheck stubs or canceled checks, as the case may be. This includes quarterlies that you have to pay as well. No court-ordered payments, no child support, no dependent costs. You got remaining income here. Remember, there's no equity in any assets, zero. Total remaining income of $2,934 per month. So you would be paying, you've got reported expenses of $6,750, and we allowed $6,666 of it. Your disposable income has been calculated as $9,000. That's not net disposable income. That net disposable income, that $9,000 minus $6,066 is net disposable income. And behind the scenes, what they've done is they've taken that net amount, that $2,934, because that's $9,000 minus $6,066, and they've taken that out times the number of months left in the statute of limitations on this 2011, remember, debt, and added penalties and interest to it also, and it won't full pay that $125,000 tax debt. So now they'll default down, take this $2,934, take it times 12, and it spits out this $35,208 is the amount of the offer and compromise on this option 1, which is essentially called a cash offer. You have 5 full months to pay out $35,208. I should also point out, and I will again here before this is all said and done, when you take this option 1 cash offer type, you have to put 20% down on it. Which, let me do a little bit of figuring here, $35,208 times 0.2. This person would have to come up with $7,041.60 right out of the gate. Now, people get stressed out about that, but you know, you've got, as I mentioned, 6 full months to wait while the IRS does all this stuff, plus any time that the IRS is going to argue with you about any of these different categories of expenses or require additional information to shore up whether or not you've been paying quarterlies and whether or not they're going to give you the full amount of these expenses and whatnot. So 6 months plus whatever that amount of time takes, plus in many instances doing an appeal. Plus, it's usually about 30 to 45 days at least from the time that they say yes, usually more like 60 plus days, from the time that they say yes, we'll accept option 1, to the time that they say, you know, you've got to now put down your 20%, and then we'll start you on 5 months of $35,208. Actually, $35,208 minus the $7,041.60, that 20% that you put down. So, long story short, you got a long time before you got to come up with that 20% on this thing, okay? However, some people are just in, you know, really bad straits on this, trying to get caught up on quarterlies, for instance. And so there is a second option where you don't have to put down 20%. You don't have to put that $7,000 down. However, they take that net disposable income on option 2 here, and they extrapolate that out over 24 months. Okay, and in that scenario, then you don't have to put down 20%. You just start paying off the higher option 2 amount in 24 equal monthly installments, which in this scenario would be $2,934 per month. Okay, so you can see here you want to do the cash offer. You want to do the shorter payout of 5 months because it's, what do you know, it's half of what you'd be paying if you don't have to put down the 20%. Okay, so that's kind of scenario 2. Let's back this out even further and try a couple of things. Let's do let's keep the rent or mortgage at $3,500. Let's do a couple of vehicles this time, shall we? We'll leave the new truck in there at $850 a month. Let's tell the taxpayer, go out and get a second vehicle. And people look at me like I'm crazy when I do this, when we tell taxpayers, oh, to get an offer and compromise, you're going to have to go get yourself, I'm sorry, another vehicle. And it makes good sense here, especially if both family members are generating income, because they got to have rides to work, is the argument. And so they'll need a new, it doesn't matter if it's a new car or whatever it is, you just need to have a loan payment of $400, okay? Which would also then double your vehicle operating costs. Double that. Let's do something a little more reasonable on health insurance premiums there, just for kicks. I'm not making any commentary on what type of coverage you would be getting here. These are just filling up those boxes like we talked about a minute ago. Let's strike the life insurance premiums in this scenario. Keep the taxes the way that they are. And remember, before we started manipulating this thing, really all we've changed here is we've added a vehicle to the mix and a little bit of health insurance premium there. And what do you know? Computer says we get another offer and compromise. This time it is a $36,000 cash offer. Must be paid in 5 months with 20% down. Or a 24-month offer of $72,000, which is double. And let's break down the monthly expenses just real quick, see what happened there. Nothing else changed, but what do you know? They gave us the second vehicle loan at $400, right on the button. They gave us all of it. They gave us almost all of double our vehicle operating costs. When we moved it from $200 to $400, they gave us $392. They again accepted all our health insurance premiums. We had no life insurance in that scenario. Net disposable income there, again, no equity in the family home, shakes out to $3,038 per month, which behind the scenes, again, they're extrapolating that out over the amount of months still left on that 2011 tax year statute of limitations. They're not boring you with any of that stuff, that reasonable collection potential. Assuming, as we will here, that $3,038 a month will not full pay the tax within the period of time that they have to collect it, then it defaults down again to 12 months of net disposable income And that's the amount of your offer right there. Put down 20%, pay it in 5 months, and you save about 90 grand. So great. Let's start over with our scenario here and run something kind of the opposite. We've been looking at a zero home equity scenario, so let's look at something that has home equity in it. Again, we'll say we're not in bankruptcy. We've filed all our federal tax returns. We've made all our estimated tax payments. We don't have we don't have employees to pay in this scenario. Let's do that. Let's just move on to the next step, which is zip code. Let it start figuring all our stuff. Let's go back to the 3-person household scenario. Total members of household 65 years or older. We could put some people in here because this is a very likely scenario that I'm getting ready to run. Sometimes with folks that have on a fixed budget or really no recurring income, but they have significant equity in their home, for instance. Let's do the $125,000 tax debt again, the most recent year. Let's move it up. Let's give them a longer statute of limitations to mess with here, okay? Very recent tax year. And by the way, a lot of times people will tell you, the IRS will tell you, boy, with home equity and the tax years being really new, there ain't no way you're going to get an offer in compromise. Well, let's just see about that. Deplete the bank balance down to $12 again. Let's move the home market value in this one to about 75 grand. Let's put let's even put a home loan balance on there. Let's do a significant one there, $40,000. I don't know if that one will clear, but we'll see how it goes. Not going to worry too much about vehicle equity here. Let's go ahead and say they got a free and clear vehicle even. No vehicle 2, no retirements, let's say. No other real property. Other assets, none. No stocks and bonds, no miscellaneous. Let's give them real low wages in this one. $2,000 a month of gross. No interest. None of these other things in the way of income. We want to get this income in this scenario down as low as possible. Let's do, I don't know. Let's do this $300 in mortgage and utilities. I think that's pretty reasonable for this one. Total vehicle zone 1. Let's say that one vehicle is totally free and clear. Remember, we're going to get some vehicle operating costs, so I might as well put them in there. I think it was $197 a month of vehicle operating costs. No public transportation. Let's not worry about health insurance premiums or life. Let's say they've got $500 a month in taxes there. No court-ordered payments. No child care. Still getting an offer in compromise on a $125,000 debt. Look here, total remaining income after the $2,000 a month in income, and they're upside down with their expenses by about $500 in things that the IRS will allow them to spend their money on. And there it is. a big fat zero, but $20,000 in equity there. But of course, that isn't $125,000 in equity. This scenario that I ran would run up to, I mean, you know, up to $125,000. They're going to get $124,999. They're going to get an offer, but they're going to have to come up with the equity. So this is what's called an equity-only offer in compromise. And again, all these things are doubt as to collectability types of offers in compromise. We've talked about that general thing in the last video, as well as in my book, which is available at traviswatkinsbook.com. You can get a free download of that, but this is way more deep dive than even that one. So you've got two options here. Pay $20,000 within 5 months, or pay the $20,000 over a 6 to 24 month period. And in option one, again, this is a cash offer, and if you get $20,000 laying around, well, great. Or if Grandma does, then wonderful. You wouldn't, because your bank account's at $12 again. So in this option one, you're going to have to come up with 20%, that 20% good faith down payment with this thing. Or you could just pay $20,000 over a 24-month period. Which would you rather do? Put down, what is that, $4,000, or just pay it out, $20,000 over the course of 24 months, which is $833.33. I'm going to take option two on that one. So in this equity-only scenario, option one, cash offer, versus this 24-month one, does not result in any difference in the total offer amount. It's only a significant difference in how it gets paid out. Okay, so I think most people in that scenario would end up going with the 24-month offer. All right. Okie doke. Let's collapse this thing if we can. So now that we've got an offer here, it directs you to the offer and compromise booklet there at the top of the page. And again, nothing's getting saved in any of this deal, so it's not going to populate any of these things for you. You're going to have to go do it yourself in this offer and compromise booklet. It is the 656 booklet, offer in compromise. Let me just show you a few things on this thing. If you were to be doing this thing yourself, I keep in mind all the things that we've talked about with that calculator all kind of come home to roost. All the problems there when you go to actually put this stuff into the form itself. The first few pages are all explanatory instructions on how to apply for an offer in compromise. Skipping down to page 1 of the 433 OIC. We've talked about 433A a bunch. It's the collection information statement for wage earners and self-employed individuals. And we've been over this form, really. This one is designated OIC. It goes with your packet. But nothing really significantly different here than your regular type of 433. They're going to want personal and household information. If you want some more instruction on that, go back and look at previous videos on the collection information statement. Section 2, employment information for wage earners. Okay. 3, personal asset information. They're going to want the bank accounts, any type of IRA, retirements, 401ks in there. You're just tallying all these things and telling the IRS where these are, by the way, which is kind of a scary proposition if things don't ultimately pan out. Then the IRS knows all the things about where to go to find the money, but you do have to put it in there in order to get an offer in compromise. Personal assets in Section 3 continued, some real estate in there. That's where you would put your home, for instance. Also cash value of life insurance policies. There's that current market value, quick sale value thing that we talked about. Your current market value going in here, and then I don't know if it'll do things for you. Is that 200,000? No, it doesn't do it for you. Times 0.8 is the quick sale value on that. I think it was like 160 grand. Minus your loan balance. You got to tell them where your loan is. All that type of information in there. Then the next section within part 3 is vehicles that we talked about. They want to know when it was purchased, the mileage. They're looking for 6A, the total value, fair market value of the vehicle, and they will take that into consideration in the offer and compromise. Then vehicle 2 and others would go on here, or attach extra forms if you have more than 2 vehicles. Personal assets going on in section 3. List all those things there, and that the gray box is box A, the available individual equity in assets. Everything in section 3 gets totaled up there, and remember, they are going to want the value of the equity in any assets that you have: real estate, personal assets, vehicles, all those things going in that box A. All right. Part 4 is self-employed information, and I should have told you this one earlier. If you are self-employed, you should be filling out section 4 first. I would go in and, if I'm self-employed, fill out these parts first, because it's the same type of evaluation. They want business assets in there, all emptying out into box B. Okay. Section 6 there is also for self-employeds. Again, I would do this part first if I'm self-employed. Get all your gross income in there, lines 12 through 17. And then all business assets, line 18 through 28, culminating in a figure of all your gross expenses. I kind of told you wrong there. Lines 12 through 16 are all the income, and then a tally of all the income on 17. So then box C, you subtract all the income minus the expenses, and you get yourself a net business income, which then at that point you can head into section 7, which gives you your net business income has to all be included in your personal in your personal household income calculations here in section 7. So that's all, all the income sources, lines 30 through 38. And the IRS, again, will verify that stuff on its own, usually, and it may have questions. Your examiner may have questions about things there. The nice part about this is this is not an audit. You're going to them hat in hand, and you are giving them a lot of deep personal financial information that they will have on file, as mentioned, but they're not checking this thing for like major fraud, So little mistakes here or there are tolerable. They'll be checked out by the IRS, and if they aren't checked out, if your income's not jiving with what they have, then they're just going to get a denied offer, probably, if you can't get that shored up. Okay. Skipping down monthly household expenses, all that, line 39 through 48, rather 40, sorry, line 39 through line 50, and then total household expenses, and then box F, that's that net disposable income that we've been talking about. All the income minus allowed expenses goes to monthly and the remaining monthly income. All right. Here's all the stuff that the computer was tallying up for us behind the scenes. That box F times 12 is the future remaining income there for the cash offer, 12-month offer. Or if you're doing a 24-month offer, that box F goes there times 24, and then you get your future remaining income for the 24-month offer. Skipping down, you take box A plus box B. Remember, boxes A and B were those personal assets there. And then you add those to either box G or box H, depending on which type of offer you're doing there. And that sum, assets plus net disposable income times either 12 or 24, equals your offer amount. All right. Moving right along, section 9. These should look very familiar from the computer generated calculator. They want to know if you've been in bankruptcy. A few other things. Party to a lawsuit. Are you essentially getting any type of windfalls here shortly? Have you transferred any assets for less than their full market value? Any property been transferred lately in the past 3 years? Have you been outside the U.S. for 6 months or longer? They're getting at that tolling of statute of limitations. Their statute of limitations, or CSED, does not run while you're outside the U.S. for 6 months or longer. And do you have any offshore stuff? Like, why not? Let's get all the intrusive information we possibly can. Got to sign it under penalties of perjury. And this next form is 433B. It's collection information statement for businesses. I'm not going to go into that one because it's a very rare scenario and something way beyond the scope of what we're doing here today. There are some situations where businesses can get offers in compromise. The great majority of those are businesses that are no longer functioning. They are not viable, and therefore you're flushing some tax debt on something that's not typically got any more value coming in through it. You may have assets, but anyway, we'll move through all that stuff. If you're not doing a business offer in compromise, you don't need it. It's very similar to the 433A. Skipping now to 656, the offer in compromise. This is the actual form that you're going to be using to do your offer in compromise. Got all your individual information. It's got here what tax years you're going for here. Remember our scenarios, we did 2011 and 2016. Those would be going in that box there. Trust fund recovery penalties are also things that you can get offers in compromise on. That's payroll taxes that flow through to the individual. Nasty taxes. They can be reduced in a offer in compromise scenario, even though they're sticking around in most scenarios like bankruptcy. You're not going to be able to bankrupt them out of your life. 941, employers' quarterly federal tax returns, different types of things that you can get offers in compromise on. Those are outside of what we're talking about today, but you're listing them there. Next thing here is they're trying to calculate if you're a low-income taxpayer, you don't have to pay the processing fee on the offer in compromise. These are for businesses, this next section. This is where you figure out, or they figure out if you've been making your quarterly tax payments in Section 5. Section 6, they want to know where the money's coming from to pay the offer in compromise. I mean, Grandma, I don't know. this is not super important here in this part. And then you gotta check a bunch of stuff here under penalties of perjury, and then we get to the offer terms. Did I skip the offer terms? I might have skipped the offer terms. Oh, yeah, okay, payment terms. Section 4, sorry, skipping backwards here. This is that 5-month cash offer. If you're doing that one, you check the box there. Put in that total offer amount. It was like, what, 32,000 bucks in those scenarios ish, plus your 20% down payment. With the remaining balance there, let's just run it. I mean, $32,000. Putting 20% down is 6,400 bucks. Take that from the 32,000. That offer is $25,600. And then you can break up that $25,600 into 1, 2, 3, 4, 5 payments of, in that scenario, 5,120. And you do that again there, and there, and there, and there. And sometimes, if you're real crafty and you're dealing with a cool offer examiner that you've been down the road with before on these things, you might be able to get away with something like that there. You might be able to get away with balloon paying a total amount there of the remaining offer balance in 5 full months. In other words, 0 here, 0 here, 0 here, 0 here on your 4 monthly payments that went up to the final balloon payment. All right. So that's a lump sum cash offer. You can do the 24-month offer if you just want to start paying, and you would have to start paying right along with the offer and compromise when you make this. So send your first payment of the 24-month offer, in that scenario, $64,000 offer, $2,666. Okay, and then 2,666 more on the whatever day you want to set it up for, the next month thereafter, for however many months for final payment of whatever. You might be able to get away with this 000 across the board in balloon payment. I have done it before. It's kind of a drawn-out, complex process, but it is possible in certain scenarios. All right. The rest of these things, as I mentioned, source of funds, not overly, a big deal. Do have to sign this one also under penalties of perjury, and that there is your offer and compromise. They even are nice enough at the end to give you a nice checklist of all the stuff to make sure that you got everything in the 433A and your supporting documentation. Your payments, either you're showing that you are going to send in your first 24-month offer payment. You need to send in a $186 application fee with that. And then it tells you even where to mail the daggum offer and compromise. All right. So that is the offer in compromise process. All right. Gave away a lot of stuff there in that one. Happy to do it because a lot of people aren't going to my guess is that if you stuck around to watch this entire thing, you might be one of those people that might be able to do this thing on your own. All things being equal, though, I don't think that there's a whole lot of people that will be doing this on their own. I hope there are, but kind of closing thoughts on this thing. Let's say, I mean, this is kind of against my best interest, you know, to give you all these great clues and everything. But I'm happy to do it. I mean, maybe 5 out of 100 people might give it a shot, and of those 5, 3 of them are probably going to get denied on the first occasion. And in those circumstances, if you've got a good offer, you just got to go straight on to appeals, and I'll tell you more about appeals in later videos. But you know, then in the appellate process, let's say one more person gets it accepted. You know, the IRS is scary, and they do deny these things quite a bit. So if you want somebody to help you out with these things, of course, we are available to do that. You can reach us at 800-721-7054. A couple more closing things on this. You've got to stay current on your tax filings and payments for 5 full years, or everything that you've done, if you get an accepted offer and compromise, comes rolling back on top of you. So always remember that thing, that nasty deal also. So what's the best way to do this? I mean, get back into the system, pay your offer, make sure that you get your returns filed from year to year, and get yourself some bookkeeping here, especially if you're a self-employed person. You know, that's the only surefire way of making sure all your hard work sticks on the Offer and Compromise program, is to file from year to year, get some professional help with that, and to also make sure that you're paying your quarterly payments if you have to pay those things, and a lot of self-employed folks do, and that's where we earn our keep as well, in the bookkeeping process. All right, I hope this was really helpful for you, and I hope you have a great day on here. Give us a call if you've got any further questions, and I really appreciate you watching. Thanks.